Hello, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Tuesday, July 31st, and you're tuned into On Trend, the show designed to keep you on the right side of the trend. So today we're going to start with some CandleGlance charts. I'm going to show you how I work with a CandleGlance chart list and how you can customize your CandleGlance view. Then we're going to revisit the finance sector and the big banks because they're perking up. Continuing to perk up. We'll look at healthcare and big pharma because they are leading. And then we'll look at the performance disparities within the semiconductor ETF, SOXX. And finally, we'll finish with stocks to watch. So CandleGlance list, how can we view and customize these? I have a CandleGlance list that I use to check the market throughout the day so I can get an overview of what's happening quite quickly and see a chart because I'm most interested in the price chart. And so this list is called Watch List. And if you want to see what's on it, you can click that drop down at the top. And you can see at the beginning, I've got the prefix 100,000 underscore. Then I've got gold, oil, bonds, and the dollar. And then I've got 101,000, and I've got my major index ETFs, 100 and 2010, and I've got my sectors, and so on. So I keep that list in the order that I like it, and I can quickly check on the market and look at it from a top-down perspective. Now, to get to CandleGlance, we're going to go to the View All link at the top just above the chart. And when I click View All, I'm going to get 10 per page. So I could do that to scroll through and see how the market is doing. But if I do CandleGlance, I'm going to get 30 smaller charts per page. Now you can see here, now I can get a real easy glimpse of what is happening in the market. So I can see here that gold is clearly in a downtrend, nothing going there. We've got oil in an uptrend, and it almost became oversold there and turned up. You can see bonds fell really sharply and then had a consolidation for 5 days, and it looks like bonds are continuing lower. And then I can see the dollar, the advance has slowed somewhat, but it's still an advance. It was a sharp surge, and then it has slowed. And then I get into the major stock indexes, and you can see I've got QQQ at the top here, and it took a big hit over the last few days, but the trend is still up. And then I scroll down, and I can see the other major index ETFs. Scroll further down, and then I get into the sectors. It's kind of breaking down the market from a top-down perspective. So when we look at these sectors, we can see that technologies led the way lower with a pretty sharp decline over the last 4 days. Now, financials held up pretty well, especially yesterday with a small gain. Industrials were hit yesterday with a 1% loss. Materials held up with a small loss yesterday. Energy led with a 0.82% gain. Healthcare held up with a 0.06% gain. And so that's interesting. I'm seeing that finance and healthcare and energy are holding up pretty good during the sell-off that we had yesterday. So that's information I can use. Now I can also customize these CandleGlance charts. 2 ways to do that. First, you can see at the top here I've got chart duration custom style. I can choose one of these from the drop down. So I can choose 2 months and I'll get a 2-month chart with candlesticks. I can add an indicator. For example, I could add the scooter line, the stock chart's technical rank, and I could sort that in a descending sort to see the ones with the strongest scooters at the top. So there we can see XOP, oil and gas exploration and production ETF, USO, oil, and energy are at the top of this sort by the scooter line. If I sort it ascending, that'll give me the weakest scooter lines at the top. And we've got silver, we've got the base materials ETF DBB, or the base metals ETF DBB, and we got the shipping ETF SEA, and of course copper is also weak. And you can see that ITB, home construction, is weak as well. Now we can also create a custom CandleGlance chart. So if I click on one of these charts, I'll get my chart that I normally see when I click on any of these charts. And what if I want to add a price channel to that? So if I go to overlays, I click price channels, And I'm going to click 255 days because that is about 1 year. So I can see when we're making a 1 year high or low. So I'm going to click area for the style. For the color, I'll make it pink. And I'll set the opacity at 0.3. So I'll click update, and that will give me a new chart. I'm going to go ahead and save that so it stays the way I like it. There's also something you can do if you want to apply this particular style to all the charts in your chart list. If you go down to the bottom, there's a button for Apply Style to All. I'll click that, click OK, and OK to reconfirm. Now all the charts in this list will be shown in that style. Now what I want to do is I want to apply this chart style to see in all of my CandleGlance charts. So what I'm going to do is I'm going to replace the chart style. You can see I've got a chart style called CandleGlance. We all do. It's the default for your customized CandleGlance chart. And I'm going to replace this, the current chart, and I'm going to put it instead as the CandleGlance chart style. All right, so when I do that, now all the CandleGlance charts that I see will have this chart style applied. So I'm going to go View All again, and I'll go to CandleGlance. And there you can see I've got the price channel in pink, and you can see gold made a 52-week low, a 255-day low. We can see oil is making 255-day highs, long-term uptrend there. And we can see QQQ making 52-week highs as well. So it's a quick way to see where the 52-week highs and lows are, the strong uptrends, the strong downtrends. Revisiting the finance sector and the big banks. So as noted, the finance sector held up pretty well yesterday, and it's actually been leading the entire month of July with a pretty nice advance. Now on the bigger picture, I've shown this chart before, we have that massive advance. It was like 28%, and now we've got this correction underway. And this has been the strongest surge since January because RSI moved above 70 for the first time since late January there. So that means you've had some sort of a momentum breakout of sorts, and that is positive. But you can see on prices, we've got resistance here in that 28.3 to 28.45 area, and we're getting a little bit extended short term, so maybe we get a little pullback. But I would expect a higher low and a breakout here because of this leadership surge we've seen in the finance sector and the leadership we're seeing from some stocks like JP Morgan, for example, which is one of the bigger stocks in that sector. So I've got a number of stocks to show you in this sector, and we're going to start with JP Morgan, the house that Jamie Dimon built. And how do we know it's leading? Well, we can see on that chart that we just showed you that XLF has not cleared these highs, and JP Morgan has cleared these highs. We also know that the S&P 500 is challenging its 2018 highs, and so is JP Morgan. So on a chart perspective, JP Morgan is keeping pace with the S&P 500, and that is positive. We can also see a similar structure, a big advance, a corrective decline that retraced around 50% and got the breakout first here. And this is an interesting way to play a bigger pattern. If you see a bigger correction unfolding like this wedge, you can try to play the breakout within the pattern for an early signal like the one we had here in early July. Then we got a trend line breakout here, and we got a resistance breakout here. Now, I'm not going to call this resistance here from these January, February, March highs because I think the trend is up. If we do get a pullback, I think this breakout zone around 110, 112 might offer support and a second opportunity to partake in the bigger uptrend. Now, the next one we're going to see is Bank of America. It's not quite as strong as JP Morgan, but you can see it did just edge above that May high. So it's at its highest level since March there. But we have the similar structure, the wedge correction, the wedge breakout. And again, if we get a pullback, I'm going to look for support in that 29.5, 30 area. Next up, we have American Express, and this one took a pretty big hit, but it was one of the leaders going into the pullback that we saw yesterday. And overall, I think we have a big inverse, or a big cup with handle, if you will. And we got a breakout there, and you might say, oh my God, it's a failed breakout, it's bearish. Well, okay, it didn't hold, but it's a 52-week high. All right, and I think that is more bullish than the fact that we pulled back here. The whole market pulled back, especially the high-flying stocks yesterday. Well, not the whole market, but the high-flying stocks did. And I would be watching for RSI to move into that 30 to 40 zone like it did in mid-June, and watch for a pullback as an opportunity, not a threat here. Here is Citigroup. Now, this is one of the weaker ones overall because you can see, first of all, it has yet to clear the spring highs. But we did get a nice leadership surge in July with the rest of the group and a breakout and a break above that wedge line there. So this breakout zone turns first support if we get some sort of a pullback in banks. USB, I highlighted USB, US Bank Corp, and don't ignore this chart yesterday, and I've highlighted it before. We have an island reversal. You have a gap down, some trading below the gap, and then a gap up. And this creates the island where anybody who got short here is stranded with a loss. All right, you did have a pullback, but look at the breakout. All right, so this breakout zone becomes first support, classic tenet of technical analysis, broken resistance turns support. So if you get a throwback, watch this area. And next we have Goldman Sachs. Now I couldn't talk about the finance sector without talking about Goldman Sachs. It's a little bit stronger than Citigroup for the simple reason that it did clear that June high, but it hasn't cleared that May high. So overall, it's not as strong as JP Morgan. JP Morgan and Bank of America, I think, are the leaders here in this group. But it looks like we've got a breakout of sorts. And you notice that we have this trend line break and we have an RSI breakout as well. And that's what I think a trend line basically shows you. The angle of descent of a trend line is the downward momentum. All right, when you break that trend line, it tells you that momentum has shifted. And if you look at RSI, in April, it couldn't get above 60. In May, it couldn't get above 60. In June and in the first part of July. But then in the middle part of July, it had a breakout, kind of a momentum breakout. And that coincided with the trend line break. So I think that's what a trend line break tells you. And now we've got the higher high. So if we get a pullback, I think that's going to be an opportunity. Healthcare and big pharma take the lead, and I think this is probably the strongest sector at the moment for me. Now, this analysis that I'm doing for healthcare and the finance sector is basically a follow-up because I've been watching healthcare since June 26th when you had the original breakout in XLV. This is the Arch Charts post from there. You can see that in the archives. But if we go down this chart, sorry for the scrolling if it's making you dizzy, but we can see, 7 of 10 were up year to date for healthcare towards the end of June. It was only Johnson & Johnson and Bristol Myers that were weighing. So there was internal strength. And then I look at the individual charts for some of the key players in the pharma sector. I'm going to look at those again. Now also in Arch Charts on July 16th, I highlighted the healthcare, industrials, and finance sectors because they were making a move. And you can see here, if you go down, there's a picture of Jökulsárlón, which is a glacier lagoon in Iceland. But we had healthcare leading there in July, and I showed some more leadership. XLI was pulling ahead of XLF, but there was the breakout within the pattern, if you will. A bounce off support. That was the early entry. And if you look at XLF, I highlighted that little flag after this breakout from the previous week. So XLF has been on the radar for a couple of weeks now, and now it's at this kind of moment of truth. And now let's turn to XLV and healthcare. Now here's the XLV chart, and XLV HealthCare really led the market with that surge from mid-November 2017 into January. I guess it was going parabolic, and then boom, it just gave all of that back within about 2-week period. So it took the stairs going up and it took the elevator going down, and then it's kind of consolidated around here. But there is the first breakout that we had in late May. We had a little pullback, another higher high, and then the break above the February, March highs. So this is one of the stronger sectors when you look at where it is right now relative to these February, March highs and to this June high, because it's still above them. And so it is showing some leadership. Now let's look at some of the stocks within the sector. So here's Johnson & Johnson, and the reason it's first is because it is the biggest component in the sector, and it was really dragging on the sector. There you can see that big decline in January, February from 146 to 122, and it bounced and then moved to new lows. But then Johnson & Johnson managed to firm and lead in July. So Johnson & Johnson has made a comeback, and that has helped the healthcare sector. But still, it's not one of the leaders out there. When you're looking for leadership, you can see some of the big pharmaceuticals like Pfizer. Pfizer is almost at a 52-week high. And I've been focusing on this one since it had this big triangle forming. You can see it had a gap down and it filled the gap. There was a gap up and a triangle break, and then there's the big breakout right there at 37. So Pfizer is definitely one of the leaders and one we want on our radar. Another one would be Merck, right? Merck was not looking very good in February because you can see you had the gap up, it didn't hold, and you had an equally large decline or a bigger decline. But you found support here at 53, got the surge, a little triangle, a breakout, a little flag, and a breakout, and we've got a 52-week high. So when you see a stock hitting a 52-week high, you don't need to know what the trend is up. It's also leading if it's hitting a 52-week high. So those are two very important things, and that's a stock you want to have on your radar. Another stock making a 52-week high and showing some serious upside leadership is Lilly, Eli Lilly. Now, sure, this one's gotten away, and it would not be smart to chase it. You had the little flag there and a breakout. And after a move from 84 to 98, I wouldn't chase it here. But it just shows you've got Merck at a new high, Lilly at a new high, Medtronic I haven't shown, and Pfizer's almost at a new high. And that shows you some good strength within the healthcare sector, and that's a sector we want to be involved in. Now we look further down, we can see Gilead Sciences. Now this is getting more towards the big biotech end of the healthcare sector. But what can we see here? Well, we can see leadership in July, and actually leadership since May. You had this big breakdown and decline on heavy volume, bit of a selling climax, if you will. But then we started filling the gap, and that breakout there basically filled the gap, reversed the support break, and it looks like Gilead is turning bullish again. And I would view this consolidation as some sort of a flat flag and expect an upside breakout. Or I would use RSI to look for a pullback, say 10-period RSI moving into that 30 area, 30, 35. Next up, we have Amgen, another biggie, and it is almost at a 52-week high. So again, good strength within the sector. Sure, Amgen has gone nowhere. Well, it's been in a choppy range for the past year, but it's at the upper end of that range, and that is more positive than negative. Here's Bristol Myers. Now, it's not one of the leaders overall for the simple fact that it's not at a 52-week high. But look at this resilience, all right? It looks like Bristol Myers is breaking out there, and, it's kind of a triangle of some sorts or channel forming and a nice breakout there, but it didn't hold. And instead, you fell back, and then we had this big plunge on bad news with high volume, but it turned out to be a selling climax, all right? And we firmed, and then we started working our way higher, and volume picked up, and now Bristol Myers is back above that support break, And I would call it an uptrend in favor of the bulls as long as 55 holds. Moving to the next page. Now, this is a laggard here. It would be AbbVie, and I'm showing you the big ones in the sector. These are the main drivers for the pharmaceutical sector. But AbbVie has some lower highs working and some equal lows, maybe a descending triangle, which is bearish. But the fact that the sector is so strong leads me to believe that this will be resolved bullishly, okay, because of sector leadership. And if you think of it in bullish terms, you got support here, and we're at support, and you got a little surge and a little pullback. But now we want to see a breakout, say at 98, and a breakout at 98 would be bullish. And you can see that RSI has a small positive divergence. I don't use those very often. I think the chart says enough. I don't need RSI for that. But, you can see it's holding the 30 area on that pullback. So a break above 70 would be bullish for momentum on AbbVie. United Health, definitely a leader because it hit a 52-week high here in July. So it's just kind of been working its way higher since April there. Nothing much to say here except the pullbacks are going to be opportunities, not threats. Now, speaking of big biotech, here we have Regeneron, all right? And what's interesting about this one is it looks like it has reversed its big downtrend. This was weighing on IBB, the big biotech ETF iShares. Look at that downtrend from 510 to 280, and we got a trend line break there. And look what happened when we got the trend line break. We also got an RSI break above 70 there. So RSI kept peaking. It couldn't get above 70 throughout that decline. And with the trend line break, we've broken above 70. And that trend line break basically tells you you've had a change in momentum. Now, if we look at the shorter term picture, we've got a big advance and a flat consolidation. It looks like a flag. Looks like there's some accumulation within that flag because a lot of closes near the high. So I would expect a breakout and a continuation higher. Here is Anthem, and it's one of the younger uptrends, if you will, because it had a correction along the way. It had a 52-week high there and then corrected and got the breakout in June and is building on that breakout with a little breakout of that flag-like pattern yesterday. Intel was hit with a big decline, and that seems bearish for semiconductors, but when we look within the index, there are still some pockets of strength within that group, and so let's look at some of the disparities. So first we're going to look at the SOXX, the semiconductor ETF, and you can see the biggest holding is Intel. So when Intel got hit, you would think it would have broken down, but it hasn't. It's held up pretty good the last few days. So I identified this mean reversion setup when the SOXX hit that 61.8% retracement and RSI was moving above 30. And so that play remains in. And you can see 3 lows there, or 4, right in that 180 area. So if you close below 180, then maybe we're going to get another leg down towards this support zone in that 170 area. So that would kind of be the first level to watch for SOXX. Now let's look at some of the individual stocks. So here's AMD, which is basically going the opposite way of Intel, at least over the last week or so. Look at that breakout and surge in AMD. Now, would I chase AMD after like a 20% move over the last 3 days? No. But this resistance zone around 17 becomes support, so that might be the level to watch. So clearly there is some strength within semiconductors. Now, in contrast to AMD, we have the breakdown in Intel. And there you can see that sharp decline that we had on Friday. But the big trend is still up. The 50-day EMA is above the 200-day EMA. You had a 52-week high here in May. We've got broken resistance turning into support, and we're right there now. And then we got this big consolidation that may offer support in that 43 to 46 area. So I would be watching Intel for a bounce in the next few weeks. Probably need some time to settle down, though, and let the dust settle, if you will. Now here's another one that's moving higher like AMD, and this will be Cypress Semiconductor. You can see that gap up and almost a 52-week high. But it's got a choppy advance working here, but the 50 days above the 200-day. So, this one is still clearly more bullish than bearish. It's not just about Intel. And when you get these choppy advances, you can see that RSI is your friend. When it becomes oversold and moves above 30, as I show you with the blue lines here, we typically get a bounce. And there were 4 nice bounces identified by RSI moving back above 30. Here is ON Semiconductor. Now it took a hit, so I can show you 2 hits, Intel and ON Semiconductor, and 2 gainers, AMD and Cypress. And if we look at the chart here, you can see that ON Semiconductor has basically been declining since February. It hasn't gotten out of that decline, and it got hit pretty hard yesterday. So that gives us a first resistance level to watch, and we need to get a breakout there to get that one back on track. Now looking at a few more, look at Xilinx. Okay, Xilinx, I'm not sure how you pronounce that, but clearly a big breakout there with a massive gap. All right, and that gap is bullish until proven otherwise, and it should at least be on our radar for pullbacks and opportunities maybe when it becomes short-term oversold. Here's Analog Devices. Now, it took a hit yesterday, but I still think this one's in a long-term uptrend, and there's more opportunity here than threat. And that is because look at this breakout and 52-week high. All right, the long-term trend is up. Sure, we had a decline, we had a bounce, and it looks like we're continuing, but I would expect support in that 92, 94 area, and look at broken resistance turning into potential support, and if RSI gets to that 30 area, I would become interested in ADI, and I'll keep track of that for you. Moving to the next page, just got a couple more. Here's Cree. Cree is clearly in a long-term uptrend there. And you can see it got hit the last 2 days, but nothing going here, nothing to be worried about just yet. And here's one that looks the most interesting to me. It'd be Maxim Integrated Products. And the reason is there's an uptrend working here. Ignore this spike. I would just chart it from February. But you can see a consolidation, and we got this little reversal over a 6-day period with a sharp decline, indecision, and a gap up, and a follow-through breakout is going to be bullish for Maxim Integrated Products. And finally, NVIDIA. NVIDIA is probably going to create opportunity if it declines further. Now you can see there's the first hit, and then it bounced, and maybe it's getting the second hit. The second shoe is dropping. But I think if it gets into that 225 area, I would become interested, especially if RSI gets oversold. If you have any questions, comments, or feedback, please send an email to askarthur@stockcharts.com. I cannot answer them all, but I do promise to read them. And we'll close with a few stocks to watch. I'm just going to run through these charts quickly because we're running out of time. All right, so this is going to be quick and dirty. This is Allstate. Looks like it's breaking out of a trend line with a little gap, and you can see the PPO is turning up for the long-term uptrend. We can see Walmart maybe making a rounding bottom and on the verge of a breakout there. 50-day on the verge of crossing above the 200-day. Allergen has a double bottom working. Look at the breakout, and it is extending on that breakout with a 3-day gain on high volume. Dollar General continues to consolidate within a bullish flag wedge, looking for a breakout. And Kohl's is breaking out of a wedge and showing some strength in the retail group. And that concludes this edition of On Trend. Thanks very much for watching, and make sure to stay on the right side of the trend. Have a great day.